How do you feel? Renowned Tesla bull Cathie Wood offers some observations regarding Tesla stock. The majority of analysts predict that at the start of 2023, the price of Tesla stock will rise significantly. When interest rates decline in response to inflation, Cathie Wood stated that you would most certainly not want to overlook this point. Many investors blame rising Fed rates for the decline in stock values in the market, while others are concerned that a U.S. recession may occur by 2023. While many economists and strategists have been resisting the idea that we are in a recession and anticipate that the U.S. may enter one next year, which we actually think will come out of it in 2023, founder of ARK Investment Management Cathie Wood believes that one has already hit and that it could be over in 2023. Cathie Wood issued an alert about the United States' impending recession in late June. In an interview with CNBC, Cathie Wood, the CEO of ARK Investment, acknowledged that she had misjudged the level of inflation. She went on to say that supply chain disruptions and geopolitical factors like the conflict in Ukraine were to blame for the inflationary pressures that had exceeded her expectations, and that the U.S. economy is probably already in a recession. She added that a recession had already started in mid-2022, mostly due to poorly managed inventory. According to Wood, the inventory recession that the United States is currently experiencing is rather severe, but it will not resemble the systemic recession and financial crisis of 2008 to 2009. It would be more of a garden variety, she clarified. Wood expressed his belief that the COVID-19 aftermath will recur over the course of the next 5 to 10 years, albeit not just for a year. After that, she outlined an innovation timeline, stating that the U.S. is now in a period like no other in history. Would explain that this is from data put together by ARK Invest's chief futurist Brett Winton after consulting academics and academic research. These were the true disruptive innovations throughout history. Wood pointed out that there's only one other time before today that the U.S. has seen multiple innovation platforms evolve at the same time. According to Cathie Wood, it was during the early 1900s when the telephone, electricity, and the automobile transformed the world. Wood took it a bit further and said that the U.S. is now in a period like it was back then. At the time there was a pandemic, the Spanish flu, and World War I. Those are arguably similar to what we had experienced in the past year with the global COVID-19 pandemic, as well as the Russia-Ukraine war. However, those problems were notably much worse than our problems today. Still, even during those tough times, innovation took off, and the U.S. ended up with inflation peaking at 24% in June of 1920 and dropping within 1 year to negative 15% in June of 1921, having been through a very tough period. We ended up in what was called back then the Roaring Twenties. It was a great time for the stock market. It was a great time for investments of all kinds because inflation and interest rates were coming down. Instead, we would then continue to say that today there are 5 innovation platforms evolving at the same time in the U.S. This has never happened in history, and the seeds for all of them were planted during the 20 years that ended in the tech and telecom bubble. The tech and telecom bubble is the first time a lot of investors heard this concept of exponential growth, and they bought into the dream. However, the issue at the time was that the technologies weren't available, or if they were, the expenses were much too high to be shared. Timber Wood went on to say that the cloud wasn't invented until 2006 with AWS, and that the major advances in artificial intelligence through deep learning weren't realized until 2012. In terms of DNA sequencing, one person's genome was sequenced back in 2003 when the first complete human genome was discovered. That single genome required 13 years of processing power and $2.7 billion to sequence. The price would still have been too high even if it had dropped by 75% the next year. Given that, the cost of a single person's genome has decreased from $2.7 billion to $500 today, plus a few hours of processing time. We think we're ready for prime time. In fact, 2 firms, Illumina and Ultima, say it's highly feasible that it will be 100 or 200 by next year. What are these platforms that Cathie Wood is now developing simultaneously? The first is DNA sequencing, which is now known as multi-nick sequencing, as it also takes methylation and RNA proteins into account. It's tremendously exciting, despite being really complicated. These discoveries will enable us to cure sickness. In fact, just this past week alone, we've seen one extremely significant breakthrough, according to Wood. Robotics is an additional invention. It is her belief that the cost of industrial robots is rapidly declining and that there is a manpower shortage. Errors are solved by innovation. Robotics are in high demand right now, according to Wood. Another breakthrough Cathie Wood mentioned was energy storage, citing a shift in customer taste toward innovation. According to Wood, the reason for the increase in oil costs is not solely due to the conflict between Russia and Ukraine. There are other factors at play as well. Specifically, the new cars are more energy efficient. Artificial intelligence is another. I have to say that the advances in AI nowadays are astounding. We are attempting to look as far into the future as we can even now, and in just 6 months, we are witnessing advances that we had anticipated would take 5 or 10 years. Cathie Wood's final example of a developing innovation was the ChatGPT, an OpenAI computer application that debuted in November 2022. It is developed using supervised and reinforcement learning methods, and it is based on OpenAI's GPT 3.5 family of big language models. 3 of the 5 breakthroughs that Cathie Wood discussed today that are evolving simultaneously are encompassed by Tesla: energy storage, AI, and robots. Many are therefore upbeat about the company's future. Early in January, Tesla is anticipated to disclose record quarterly deliveries, yet, given the company's struggles with inflation, investors may not be satisfied. Growing borrowing rates hindered China's manufacturing and sparked worries about a slowdown in demand as companies try to reduce their stock. Customers in the U.S. who took delivery of a new Model 3 or Model Y at the end of the year were eligible for a unique 7500 discount from Tesla in addition to free supercharging for 10,000 miles. On January 1st, the federal tax credits of up to $7,500 for specific EVs will be reinstated under the Inflation Reduction Act, also known as the IRA. One of the measures that investors are most interested in monitoring to determine if Tesla can continue its explosive expansion is deliveries. 420,760 cars could be delivered globally in the fourth quarter, according to a Bloomberg survey of 16 analysts. That estimate surpasses the record of 343,830 cars shipped in the third quarter, and it excludes some of the most recent analyst projections. Although Tesla is the largest seller of electric vehicles worldwide and is well positioned to benefit from some of India's tax credits for battery cell manufacturing and locally assembled EVs, the company has warned that it will fall short its target in 2022. It doesn't increase deliveries by 50 per year over a number of years. Regarding gross margins, Tesla is probably going to have to make some concessions. Tesla has lowered prices for all of its models in China and announced maintenance at its Shanghai factory. According to 24 major brokers, Wall Street is forecasting little less than 420,000 units for the final quarter of 2022. The delivery schedule has been getting closer together over the last 2 weeks. Estimates for the fourth quarter peaked in the summer at roughly 450,000 units. Approximately 430,000 units were the consensus expectation for the fourth quarter as of December, according to FactSet, a financial data provider that includes a list of over 40 analysts that monitor Tesla's stock. Investors should be satisfied with a figure of about 420,000 if delivery outcomes are up to par. When complete quarterly data are released a few weeks later, analysts predict that Tesla deliveries will increase by almost 40% in 2023 to reach 1.8 million to 1.9 million cars, up from roughly 1.3 million in 2022. Tesla shares usually perform well in the interim between delivery results. Achieving the 2023 delivery targets will be crucial in persuading investors that the 2023 earnings projection is accurate and that Tesla's shares may have been oversold in the previous year. It's just too early to know how 2023 will pan out for Tesla shares at this point. For more, don't forget to subscribe to this channel.